Hello there. Both gold and black gold might be making a bit of a turnaround within the next few days. So let's have a look at the details. Welcome to myfinanceteacher.org, where our data-driven approach guides every step of our journey towards maximizing profits. Let's first look at gold before turning our attention to crude oil. In this video from 9 days ago, I mentioned that gold was about to launch, but first, a little refueling. If you zoom in a little bit over the last 9 days or so, that's exactly what gold has been doing, some refueling. And the refueling is coming to an end soon, to be followed by a continuation of rally towards the all-time highs and beyond. Zooming back in on October, clearly gold has started a new intermediate cycle in early October, and it's now declining down into the end of the first daily cycle. Daily cycles on gold usually last for 1.5 to 2 months. Currently we are 34 days into this ongoing cycle, so this 200 or the 50-day moving averages might provide some support for the start of a new daily cycle. Again, zooming in a little bit, additionally looking at the Fibonacci retracement numbers, this 200-day moving average aligns pretty well with the 38% retracement. As I mentioned many times in my previous videos, the most common retracements that provide some significant support are the 38, 50 or 62% retracement levels. So there is some confluence of support around 1940 from this 38% Fib retracement as well as the 200-day moving average. Next, looking at seasonality on gold since 2015, we see that there is usually a decline down into late November with the tax loss selling, but perhaps a decline into this tax loss selling this year might be relatively mild, because in that case a decline into the daily cycle low that I've just mentioned might be enough for this seasonal weakness around late November. Hence, while seasonality does caution us of a possible painful drop into late November, it might also align with a mild daily cycle low instead. Next, looking at miners, this is GDX, we want them to hold this level of August low, that's around $27.3, $27.27 actually. In that case, miners might be forming this inverse head and shoulders, which is generally a bullish sign and again would align well with gold's continuation of this ongoing new, relatively young intermediate cycle, continuation of the rally towards those all-time highs again and beyond. How we're going to break through those all-time highs, I'm going to talk about that in one of the upcoming videos, so stay tuned. Next, let's discuss black gold or crude oil. Oil might be forming an intermediate cycle low over here, perhaps over the next few days. Oil cycles usually last for an average of 157 days, that's at least since mid-2017. And this ongoing cycle is now 134 days long. So it's pretty close to its average duration. There is also a chance that we saw the cycle low yesterday at 133 days into the cycle. After all, oil price is at support, both from this June high, that's a horizontal support here, and from additional support of this May to July low trend line, coming pretty close to where the oil price is right now. Again, a couple of support lines coinciding around current levels as well. However, if you project this head and shoulders formation with a bit of an inclined neckline, this vertical distance of around $9 to $10, if projected down from the break of this neckline, gives you a target of around $71 on crude oil. In either case, whether we've seen the cycle low yesterday or one is upcoming relatively soon, we are pretty close again to an intermediate cycle low in crude oil, which usually are pretty good buying opportunities. Let's have a look at seasonality on crude oil, again starting from 2015, the end of that bear market in commodities. The crude oil seasonality also suggests some caution again into late November as well as early December before the typical start of a rally into a new intermediate cycle. So seasonality doesn't specifically disagree with our expectation of an intermediate cycle low on crude oil relatively soon. Although seasonality does suggest a bit of an extended formation of these lows around here before a start of a new intermediate cycle. And lastly, let's have a look at market sentiment, which is pretty important as usually you want to buy when blood is on the streets, so to speak. Just like with everything in life, cycles also show themselves in these seasonality patterns. In the longer term, we have good times as in 2021, as well as the first half of 2020, where the intermediate cycles in crude oil came with this optimism index, dropping down to just a little below 50, while the bad times, as in the second half of 2022 as well as the first half of 2023, we've also seen the bad times all through 2019 up to the second half of 2020. During those times, intermediate cycle lows on crude oil finish with the optimism index somewhere around that green line, somewhere around the level of 30. Currently, I would suggest there is a pretty good chance that we are entering into the good times on crude oil, in which case the most recent drop of this sentiment down below 50 might actually perk your ears a little bit, again suggesting a bit of a turnaround in momentum, suggesting an intermediate cycle low relatively soon. For much more on investing into precious metals as well as other commodities, join us at myfinancesteacher.org. Scroll down a little over here and click on this Join Now button. Do it now. Have a terrific Thursday. Bye bye.